So here we have Yum Brand. Yum Brand is the parent company for the likes of KFC or Taco Bell or Pizza Hut. Very household names. Let me start marking up this chart and explain my take. Look at these totally institutional green candles right here. Anyways. Again, guys, let me know if there's any problems with audio or visuals at any period of time. Twitch is still yelling at me about the bit rate. What bit rate are you guys using for 1080p 60? Because I've always used 6500, but it always complains and say I'm not using the right. I don't know. 6500 is what Twitch recommends. Again, guys, let me know if there's any problems. Now's a good time to grab my coffee. Still waiting for a phone call. Love to see Yum Brand push down here to the 180. It's testing that 20. It's testing that 20. We've seen that before. Look at the parallels here. You have the initial drop down to the 20. It's tested for 1 week. Let's get super over analytical. 1 week, 2 week, 3 week, 4 week, 5 week break. Came down, testing. We'll count backwards. 1 week, 2 week, 3 week, 4 week, 5 week. Ooh. So it's about due. We're about to see a decision maker on Yum Brand. That's for sure. That that's my tax guy. I'll try and let you guys listen in on as much as I can. That was not the tax guy. That was random phone call. Unfortunately. Where's my tax guy? He's slacking. Hmm. That was not the tax guy. That was All right. Okay, for everyone who might be new here, again, my name's Ethan. Make sure you check out my website, ethanwrenn.com. All the links are below. From there, you can find all my various socials. Make sure you're following on all the various platforms if you want to stay up to date with all the latest information, guys. We have Discord, Reddit, Twitch, Twitter, YouTube. We have a bunch of new highlights for past streams, all of which are still very current and very relevant. Make sure you go watch the highlights. Your mind will be blown if you go watch the Snapchat highlights. We have 2 of them, the before and after the new nuclear explosion went off there. So make sure to go look at that. It's crazy. We've been trying out a bunch of different formats. I'd highly appreciate a follow. Your name will come up on screen. Again, you could type anything in chat. It'll come up on screen. I'd be more than happy to cover any symbol you might be interested in. Right now, we're looking at Yum Brand. So, Yum Brand. Yum Brand, again, is the owner of the likes of, they're the parent company of like Pizza Hut, KFC, Taco Bell, those fast food chains. I hate fast food. I never eat fast food. Never, ever. I have a really strict diet. I don't drink. I drink like nothing but like water and milk, protein bars, protein shakes. So fast food to me, I am not the target audience. So let's get that squared. If I were to ever go to a restaurant, which I also never do because I do the meal prep thing, it would be a more mom and pop thing, a more like local support small business, guys. Support small business. That being said, let's look at where we're at. Let's start with the income statements. In 2017, Yum Brand had a profit margin of 22.8, very respectable. In 2018, they had a profit margin of 27.11, very respectable. In 2019, they had a profit margin of 23.12. Good, but starting to dwindle a little bit, right? This orange line starting to point down. It looks like a roof. We don't like that. In 2020, they had a profit margin of 15.99. Now, that was the year of Corona. We did say that a lot of fast food chains were considered essential services. For some reason, their paycheck was essential while others wasn't. We're not having that debate today. So technically, they were open, whether people were going out and buying as much as they used to. That's the question. The revenue would show that they did. Their revenue remained relatively flat. Unlike McDonald's, who was having a little bit of a dwindling revenue, Yum Brand has about a flat revenue with a more so relative sense dwindling profit margin. But again, still profitable, still pretty solid. Now, what kind of trend do we got? Again, we're looking at the weekly chart right now. We're looking at the weekly chart. This particular company, as well as McDonald's, again, which we just covered and will be available in a highlight after this stream. We kind of have identified these trend lines, support, resistance. The exception of one down here. Do you guys want me to put an orange line down here? Why is it orange? It's orange because it has no second prior, but it has visited that price point before in the past and the relatively recent past, within the past year or two. Now, again, put this down. Look at that. Okay. So as we talked about prior, we're starting to see a little bit of a similar pattern / trend here. So we saw the initial drop off and we counted 1, 2, 3, 4, 5 candles, and then it broke through its weekly 20 moving average. Here we are. 1, 2, 3, 4, 5 weekly candles that it is testing, it's spinning. right at that weekly 20 moving average. Well, this is a test. Now, if it breaks below the 20 moving average, expect it to keep falling all the way until it hits that weekly 180, which just so happens to be a perfectly round number of $100. What a coincidence. That is about a move of 20% to the downside. Not too crazy. It's not going to, nobody's going to go broke out here. But that is a significant move that if you can capture a portion of it, if you're a bear style trader, it could be very lucrative. If it doesn't break, you got about 6% to your 7% to your all-time high. And then again, we have this massive trend resistance. You have your two priors, three prior resistances at that price point for that trend line. Dividend yield is 1.59 relative to its peers. Again, McDonald's was at around 2%, so it's a little lower. Market cap is $37 billion, which is substantially lower than McDonald's. What was McDonald's? It was like 190 billion. So McDonald's is about 6 times the market cap of this company. Which one do you think's overvalued? Again, this one parent company represents a multitude of fast food franchises as compared to McDonald's, which is just McDonald's. I don't eat any fast food. I don't think it's good for you. Dwindling profit margins. It would make a lot of sense for this 20 moving average to break down as it has prior, with your support being at $100. Put in a bid at $100.03 and forget about it. That would be the best move here. Don't go chasing. I know you might think, oh, I love Pizza Hut. I need to own Pizza Hut. But sure, okay, you can get Pizza Hut, but be patient, have some standards, set a proper entry for yourself. I'm a little tilted that my tax guy is not calling right now. Do I need to go look into that or what? Is he gonna call me? Guys, oh my god, I'm working on a massive side project right now. Again, I'm available via Discord right now. Come join this live, free, public voice channel, and you can talk to me, tell the world how you're feeling. But I'm working on something huge right now. And tax guy's supposed to call me. I was up all night. I've been up for like 30 hours right now, and I'm still going. So I was anticipating this tax call. Really looking forward to it. Really excited to get this project in motion. But yeah, more details to come soon. As you can see, the ticker YUM has gone down 0.1% since we started this. Phenomenal. I'm sure you're all millionaires by now. That all being said, let's transition away from Yum Brand. Again, if there's any recommendations in chat, I would be super happy to talk about them for you guys. Let me know. Just let me know. Hello. So these this is just some random news also posted in the Discord, and it is from within the past 24 hours. This information was made public. This is correlates to Nintendo. When you look at the numbers for areas like net sales and net profits for a 6-month period, you'll be forgiven for thinking that Nintendo is cruising and that investors be falling over themselves to express their happiness. But billion-dollar profits are all relative. As you can see, the declines compared to the they must have had a typo there. Booming results of 2020/2021. Net sales for Nintendo down 18.9% year over year. Operating profit for Nintendo down 24.5% for the year. We're comparing this year relative to last year. This all makes a lot of sense, right? Net profits for Nintendo down 19.4%. Now, if you either knew or you didn't know, but we were heavily invested in Nintendo way back when. Pre-Corona, back when GME was only like $3. Let's see. Yeah, so we were a big fan of Nintendo for a while. Pre-Corona. As we entered Corona, we expected an increase in demand for things such as like the work from home trade, basically webcams, all of that tech. Whether it be semiconductors, whether it be video games, we were in there. We were running it up, and we got the fuck out. Once these things are starting to hit headlines, guys, and everyone's starting to talk about it, and it starts to become mainstream, these are social indicators that you should maybe consider moving out of your position. And the numbers don't lie. During the time we were holding this position, video game sales rose 400%. We were also invested in companies like Smith & Wesson, ammunition, during the same period for the same reasons. We expected the increase in demand. Ammunition demand increased 400% during that specific time period. Here we are now, exiting the Corona trade, right? So the demand for video games was at its all-time high. There's no other possible scenario where video games could have been in a higher demand, right? The same thing could be said for ammunition. The same thing can be said for lumber. There is no longer an extraordinary circumstance that would have driven this demand to companies of these of this nature. So, as we exit the Corona trades and the Corona time period and the Corona timeline as a whole, which is a good thing for, us, but as money goes, it only makes sense for their new reports to be showing this big drop off here. And we shared that with the Discord. So make sure you're in the Discord if you want to stay up to date with all the latest news. Again, this information was made public within the past 24 hours, so I just wanted to cover it too much. I like Nintendo a lot fundamentally, but I don't like companies' profit margins going down and all that. So we're investors at the end of the day, right?